Welcome back, folks. I just wanted to cover the market on where we've been and where we could go and what happened last week and what could happen for the rest of the year. First off, the supposed so-called Santa Claus rally officially takes place the last 5 trading days of the year and the first 2 in January. So all of the talking heads were kind of talking about this Santa Claus rally, and the market was up 3% last week. But technically, it doesn't start until this week, which is hopefully good news for us. Now, if you remember, we came into the week on Monday right at near the bottom of support, and I want to show you how we bounced off that and broke through resistance, and then now we're testing the top of that resistance. So if we do get a rally for the next few days, next few weeks, then we could play some call options like on the Dow and the S&P. Now, what you'll see here is I've gone to stockcharts.com. It's a free site. You can upgrade and pay for some of the other charting tools, but for this video, it'll be pretty simple. So I want to show you 2 charts real quick. One's going to be the daily view, and then we're going to do the weekly view. So I want to bring this over and break it down for you, and then show you how to play a possible breakout. Okay. So last week we came in right at 11.8 on Monday, and we said our line in the sand would be at 11.6, which is right here. And we talked about the blue chips holding 11.8, which is right here. Okay. And you can see the support here at 11.8. If I can get these colors right. Where it's kind of played around support and resistance here. That's why it was important that we held 11.8. And like I said, if we would have dipped down 11.6, then we might have seen a mini pullback. So what you can see here is the market sold off on Monday and then rebounded on Tuesday, Wednesday, Thursday, and Friday. And in that process, we broke above 12 and 12.2. So with that, we think we can go back to the highs of the year, but it depends on, if this rally plays out and to us, fourth quarter earnings. So as you can see here, the market broke above 12.2, and we're going to tell you in the newsletter tomorrow that we're looking for a run to 12.4, 12.6 if 12.350 is cleared. And then you can see here a longer term target, if it does retest the highs, would be 12.8. And if I can put some resistance levels, you see there, 12.8. So again, if we get this rally, we could go, if we clear 12.350, we could go to the 12.6. And let me show you a little resistance there. Let's see. Right here, we've got a little resistance at 12.6. So that's kind of why you see these upside targets and downside targets. But again, 11.8 held right here. And then we, like I said, we broke through 12 and 12.2. So if we do get the rally, let's look at how we can play it. The first thing you'll see here is just the Yahoo site, and you can type in the symbol DIA, and that'll give you the spiders on the Dow Jones, and they mirror pretty much where the Dow's at. As you can see, it's 122.63, and the Dow's at 12.26. So to play the options, we could look at this week's weekly options, which would expire this Friday, and to play a breakout up to 12.6. You could use these, the 124s or the 125s. As you can see, they're pretty cheap because they're going to expire in 4 days. So these are a little bit more riskier, but if you wanted to swing the bat, these would be the ones to play here. For a safer trade, we're going to look at the January calls. And you'll see both of these in the watch list on Tuesday morning. Now, the 125s are a little bit over $1, which is kind of like where we like to trade. So, 10 contracts would cost you a little bit over $1,000 to put the trade on. You could have a stop at 12.2 or 122, which would be 12.2 on the Dow. Or you could have a looser stop of 12,000. But if we don't get the so-called Santa Claus rally, normally a bear market follows, according to history. So we're trying to use history, technical analysis, and fundamental analysis, if that makes a lot of sense. But that's how I set up my trades. So this would be how you play a breakout on the Dow. And then going back to the chart, let's just say we get here to resistance at 12.4, and then the market fades, and there is no Santa Claus rally. What you would do if you wanted to play the downside, we would wait for a break below 12,000, and then you could come down here and look at the puts. So if we break back below 12, we could test 11.8 or 11.6, and then you could kind of play these options here, which are a little bit more expensive. But if we did pull back or if we see signs of trouble, then this is how you would play the fallback.